Good day, ladies and gentlemen. Thank you very much for taking the time to join us into today's workshop. Today's workshop forms part of part 4 of a 4-part series. What that means is that we've run part 1 on Monday, which looked into the theoretical underpin governing retire with GPF. On part 2, which we ran on Tuesday, we looked into the analysis of the benefit statement of a member who opted to retire with GPF. Part 3 of this 4-part series, we looked into a member who says, I am resigning. However, I do not want to cash. I want to transfer my resignation benefits into an externally approved retirement fund. So today is part 4, ladies and gentlemen. We are looking into a member who is indeed considering to resign and cash their benefit. We must make mention that this part, resign and cash, is the most popular by GEPF members who opt to resign. We've already indicated that 33 billion rand was paid in the last financial year, 2021-2022 financial year, as a result of members who resigned. And it is without doubt that majority of the members who resigned opted for this decision to cash. The question is, are these members making an informed decisions? Do they know what that means effectively to resign and cash? Or they just took a decision because it was the best decision at their disposal? Let me kindly start with background. You know that when you resign, let me start here. As a GPF member, especially from age 55 onwards, you are faced with 2 primary decision making. Do I retire, which is option 1, or do I resign, which is option 2? Option 1, do I retire, effectively analyzes and look into members who want to leave their benefits with GEPF. However, option 2, do I resign, is for members who want to exit their membership with GEPF. And once you opt for this resign option, you are going to then be confronted with 2 options again, the secondary decision. So once you say, I am resigning, you are not done. You still need to make the secondary decision to say, how do I resign? And there are 2 options at your disposal in relation to that decision. The first is, do I resign and cash, which is an option which will evaluate today, or do I resign and transfer? By resigning and transfer, you are effectively saying, I want to retire. However, I do not want to retire from the GEPF. I want to transfer my benefits from GEPF into an externally approved retirement fund. And from there, you will then be paid a lump sum, and the balance will be used to buy you pension. So it's the best of both, wherein indeed it's a retirement option when you resign and transfer. But today's focus, it will be on resign and cash, because part 3 of this workshop was interrogating the resign and transfer option. So today in part 4, we are interrogating the resign and cash option. Now, once you undertake a decision to resign and cash, before you can arrive at that position, you must first submit a resignation letter to your human resource or termination office. Once you have submitted the resignation letter, then they will present you, when now you are about to fill GEPF paperwork, they will present you with a choice form. The choice form give you two options. Option A, which is, do you want money in the bank account? Or option B, which is, do you want to transfer? So if your strategic intention is to cash, then you're going to tick option A, which is to cash all your money into the bank account. Now, once you have ticked option A, then you are effectively choosing to transfer your money from a compulsory structure. Compulsory structure, it is a pension fund system, because there is not the money in the bank where you can go and put the card into an ATM and press a PIN number and money comes out. There in the pension fund, you don't withdraw willy-nilly. That's why it's called compulsory structure. Once money sits there are terms and conditions through which that money you can get out. Then you are choosing to transfer that money from a compulsory system into a discretionary system. By discretionary, I'm effectively referring to money in the bank account. And we know what happened with such. With such, it means you've got money through which you can easily access at will. Simply, that's what it means. Then what happened under that environment? Once GPF receives an instruction or a choice form, which you have made, and such choice form says, I want to transfer money into the bank account, then you are going to be faced with a process where now you'll have instructed GPF what to do. Once GPF receive that instruction, they are going to then say, okay, this member is just chosen to resign and cash. Therefore, they will say, okay, because now you've got lump sum A, which is the actual interest or the resignation benefit. They will then go to SARS and say, SARS, this member who has chosen to cash has got a lump sum of this much. And this member has chosen to cash his benefit. Now, how much would you like us to deduct, which is tax, so that we can pay the member the balance? Then SARS is going to issue a document called tax directive. And once SARS issues a tax directive, then they instruct GPF to say, GPF, out of the member's benefit, we want you to pay us X, and the Y balance, give it to the member into their respective bank account. So today we want to interrogate this option greatly and understand its impact and its consequence effectively. GEPF rule says, at resignation, the member who has decided to resign and cash is entitled to the greater of the resignation benefit as calculated using a formula or as per actuarial interest, calculated utilizing the retirement tax table. One thing I must mention here is that when you decide to resign and cash, you have effectively forfeited the retirement benefit in favor of what we term the withdrawal lump sum benefit. So there is a retirement lump sum benefit calculation which comes with 550,000 tax-free. That applies to a member who has decided to retire. But once you decide to cash, irrespective of your age, you might be 30, you might be 40, you might be 50, you might be 60, 64, it does not matter. When you resign and cash, you are now foregoing the 550 tax-free in favor of 27,500 tax-free. So that's what then the actual interest, which is the resignation value on your benefit statement, calculated using the withdrawal lump sum benefit tax table, then it will come in and kick in and start to determine how much tax will be payable. The advantages of having cash in the bank account, we know it very well. GEPF is going to pay you a once-off gratuity amount. This is a once-off lump sum. And once they have paid you a once-off gratuity amount, then you are going to have direct access into this cash to use at your own disposal. That's the benefit. That's the benefit. The disadvantage, therefore, is that you lose a huge chunk as a result of taxation. And there is a high possibility of you using up your retirement benefits, which went into a bank account, and you may not have enough money to provide you with necessary income after retirement. And the other part is when you leave or you outlive your money. What that means is that you've paid the taxman, and then the balance of it, then you live off it up to the point where you run it out, but you are still alive. It means you are going to then subject yourself to SASSA. So we've got a benefit statement here of a member, which we believe will give us insight into how all these aspects looked into. This is just pre-1 March 1998 principle. This simply says that any member who started working before 1 March 1998, those years that they've started working on do not pay tax. These members start to pay tax from the years 1 March 1998 to date. So if you started working 1990, it means from 1990 to 1 March 1998, you don't pay tax. You only start to pay tax from 1 March 1998 to 2023, whichever month you decide to exit. That's all this simply means. So we are going to test that vested right principle. And another aspect here is that you have chosen to retire, to actually withdraw your lump sum on the basis of this tax system. So how the taxman is going to look at you is that the first 27,500, my apologies here, you see it says 27,500, it says 27,500. Kindly, I apologize, kindly cancel the last zero. It's 27,500 tax-free. The balance is taxed according to the tax table, as you see below. Let's now get into the case study, which is more interesting around the practicalities of this particular question. Its courtesy is brought to you courtesy of Net Wealth Analytics. Net Wealth Analytics is an authorized financial services provider authorized by the Financial Sector Conduct Authority under license 45110. Website is www.netwealthanalytics.co.za. Then we have requested them as the advising partner to conduct the analysis for us. And here are the results. We will start with the analysis of the benefit statement. What is critical out of this benefit statement is that this member, date of birth is 30 October 1967. The benefit statement date is 31 December 2023. And this statement was acquired on the 17th of March 2023. So what this means effectively is that this member, as at 31 December 2023, this member was 56 years and 2 months. So the member already, if this member was to retire, the member would qualify for 550,000 tax-free, because that benefit starts when you are age 55 and above. But this member here is opting to resign and cash 100% of the money in the bank account. So what is the implication? The implication is that the age of the member is irrelevant. 30 October 1967 is irrelevant. That does not have any bearing in terms of how much they get. They get taxed the same way as they will tax someone who's below the age of 55. That is the major difference between resign transfer, resign retire with GPF vis-a-vis resign and cash. So resign and cash to the other two is very strenuous and it does not serve the member interest. So we'll get to that to say, how does this thing work out? On this particular slide, of important is the resignation benefit estimated. And this one is giving us 4,490,706. So what you are saying here is that GEPF, I want you to transfer this 4,490,706 into my bank account. Then GPF will say, hold on, put on some brake. You are running, you are accelerating very aggressively. Before we can give you 4,490,000, let us go and ask the taxman how much they'll want to take out of this 4,490,706. Then the balance of it is what will pay you. That's what it means. That's why in between there is a document called tax directive. Now, let us analyze this benefit statement to see the implication. Again, the same principle applies. GEPF, upon receiving the instruction from you that you want to cash 100%, they are going to go to SARS and say, SARS, this member wants money in the bank account. SARS will then issue a directive to GPF and say, okay, out of 4,490,706, we want you, GPF, to give us X and the balance paid to the member. So let's see how it works in practice. I must also mention here, ladies and gentlemen, that this member date of death is 30 October 1967. I want to emphasize that the following analysis that is coming, it does not look into age. So whether you are 40 years, 50 years, 60 years, 64 years, and you resign in cash, it does not matter. You are subjected to withdrawal tax lump sum taxable. So there's nothing like I am above the age of 55. Therefore, when I resign in cash, I will have 550,000 tax-free. No, you don't. You have decided to withdraw your benefits. Therefore, if you decide to withdraw your benefits, you only have 27,500. When you decide to retire, then 550,000 will kick in. Now, let's analyze the pre-1 March 1998. You see the member here, having started to work 1996, 0101, and it's another point that I must also bring. Let me go back to that. You see here, pensionable service date. That is the date at which the member joined the fund. It is 01/01/1996. So 01/01/1996, effectively what it says is that this member started to work on the 1st of January 1996 when they joined GPF. Or let me say, this is the date that the member started to join GPF as a member. Consequently, from 1996, 01/01 to 01 March 1998, that is 2 years. Those 2 years are not taxed. From 1 March 1998 up to 31 December 2023, which that 31 December 2023 is the statement date, the member will be taxed, meaning 2 years over 27 years, 2 years will not be taxed, but the 25 years will be taxed. So it's 2 years over 27, which will not be taxed, and 25 over 27 will be taxed. Again, the statement come up. You see how much the member has got under resignation benefit, far below on the statement. It's 4,490,706. Now, here we bring it again. The members got 4,490,706 as at 31 December 2023. It's very important that we are working on the full value of 4,490,706 because this member does not pay penalty on this resignation value. The penalty system apply when you retire with GPF. It does not apply when you resign, either when you transfer, which is zero tax on transfer, or when you actually cash, there is no penalty. This point is very important. Now, you remember I did mention earlier that 2 years out of 27 years are tax-free. So it means the tax-free amount from emanating from the pre-1 March 1998, it is 332,645. And I must also bring it to your attention, ladies and gentlemen, that this is when you've got a pen and paper next to you to jot down these numbers so that you can reference them later. This 332,645 is what can be regarded as the 2 years of the 27 years. So 332,645 is the tax-free. But as we proceed below, you see now we've added 27,500 because that is exempt as well. That is your tax-free by virtue of the fact that you've chosen to resign and cash. Then the total tax-free is 360,145. Now, let's go and see how the taxman will look into you. On the right-hand side, we are bringing in that tax-free portion of 360,145. It goes into the left. Then it means SARS is going to look into the whole 4,490,706. When SARS look into now how to tax 4,490,706, then it means out of 4,490,706, only 360,145 is tax-free. Then 4,130,561, then that's where tax will be determined. And when we do cap 118,702, I know, ladies and gentlemen, and I please request that please do not fall off your chair. This member has got 4,490,706. They've got only 360,145 tax-free. It means the 4,130,561 become taxable portion. Therefore, if 4,130,561 is taxable, the tax out of 4,130 then becomes 1,318,702. So effectively what this means is that because you've chosen to resign and cash, then you've chosen to give the taxman 1,318,702 out of your 4,490,706, so that you can receive in the bank account 3,172,004. That's what it simply means. For you to receive 3,172,004, you must then purchase that amount by giving away 1,318,000. It is still an opportunity cost. Remember, our theme all along has been opportunity cost conundrum. Do I resign or do I retire? Do I retire or do I resign? When you resign in cash, you are caught up in a conundrum because there is an opportunity cost that there is a price to pay. For you to have 3,172,000 in the bank account, you have sacrificed 1,318,702, which would have been paid to the taxman. So that is what your tax will be. And in the bank account, you'll have 3,172,004. And that is the end of the relationship between you and GPF. And in that instance, you have forfeited medical aid because you decided to exit GPF. You have forfeited funeral benefit of 15,000 because you've decided to exit GPF, and you have forfeited the what they normally call leave days gratuity. That's what you decide to forfeit in favor of that 3,172,000. What is very important here is that kindly please bear with us that once you resign, the analysis as shown, it does not take into account previous withdrawals. If you have resigned previously, because many members resign and go back to work, resign, go back to work. If you have resigned before, the resignation value is going to come in here and be part and parcel of 4,490,000. So you might have resigned with 500,000. Then if you have resigned with 500,000, then it means effectively, then there is 4,490,000 706 plus 500,000, which was a gross lump sum before. It means the taxman is going to look into you and want to tax 4,990,706, and then say the tax on this amount less the tax on the 500,000. Then the balance you must pay. So when you resigned previously and you resign now on your last leg at GPF, there is a consequence. There is a price to pay. And the price is dire because the 1,300,000 let's go back to it, 1,318,000. When you have resigned before on 500,000, it's going to come in here and add more into this, and it's going to drive tax towards probably 1.5, 1.4 million. So you are still going to pay. That is the principle that we're trying to make. Now, let us analyze the impact of your decision. The actual interest resignation value is 4,490,706. We know that then, based on the analysis, 1,318,702 will go to the taxman. Then what remain into your bank account, it's what you will be paid is 3,172,004. Effectively, the value that you are paying to the taxman, it is 29.4% of your total resignation value. So you are buying for 70.6% with 29.4%. That's what you are doing. For you to receive 70.6% in the bank account, the opportunity cost is 29,400. 29.4%, sorry. 29.4% is the percentage that you must pay to the taxman, which is equal 1,318,702. That must go to the taxman. So you can now determine if you've worked for 27 years like this member, 27 years multiplied by 29.4%, that is almost 8 years of their life which they are paying to the taxman. The balance of those years, then, which is 21 years, it's what they are going to take home. The eight years of their life, they've donated, given to the taxman. So this is an option when we regard you as a socialist, where you are saying, let us cut my pension between me and the state so that the state can use it to develop the country. Because you are being a socialist. Why would you take 1,318,702 and give it to taxmen when this money you can use it to serve the interest of your family in another way or form? So once you take resign and cash, which by the way, 80% to 90% of GEPF members who resign go for this option. So basically there as GPF members, we can then conclude that you are socialist in your approach because you opt to give the taxman the higher amount and you decide to take less. Because you can never walk in the street and pick 1,318,702 in the dustbin or somewhere. You can never find this money. Never. So just the idea that you are giving 1,318,000 away, which was supposed to come and assist you, then it makes you a socialist. No other reason beyond that. Because you believe that when I've got a banana, I must split it in between and give to state so that the state can serve the plight of the needy. But you and your family, you'll only live on 70.6%. Is this a rational decision? We say no, it's not rational. And this I can say categorically. No way in which you can work your life and you want to give 29.4% of your money to the taxman. No way. Once you go for this option, know that you are locking yourself into poverty. It's straightforward. And we don't hesitate to give our opinion on this one. It's better if you are 55 and above, become stuck on whether you retire with GPF, or you resign. When you resign, you transfer so that you can lock in this 1,318,000. You can pay a little bit of it, but not the whole amount. And as demonstrated on the other end, on resign and transfer, when you resign and transfer, the upper amount you can pay to your taxman is around 211,000. That's how much you're going to pay. And you're going to get almost 55.6% of this 4,490,000. So it is a better value, that one, than you taking 1,318,000 given to the taxman. I refuse, and I will actually never engage in that activity. And I discourage you from the bottom of my heart, and I'm pleading, don't engage in this activity where you are looking yourself into future poverty, because you can never recover 1,318,000 into the future, and no one else will hire you to work into the future to recover this money. So you are looking yourself into poverty, no doubt, no question. We took liberty to analyze all three options: retire with GPF, resign and transfer, and cash. Now, this slide put all education we've done on when you retire with GPF, when you resign and transfer, and when you resign and cash. It puts all these options on this slide so that you can see what the implications are. On resign and transfer option, monthly incomes, tax, and net income, we left that out because it's a detailed analysis and is driven by discussion and factors. So that is a product of conversation and advice. So we do not want to give advice, and we've informed the net wealth analytics not to attempt to work on this one, except for them to give us what lump sums are you likely to get on resign and transfer, so that we can benchmark properly between the three options. Let's start with GPF. Lump sum before tax, it's 1,221,307. It's given, fixed. Tax amount, we are expecting 136,959. And after tax lump sum, we are expecting 1,084,078. Gross income, that is monthly pension, we are expecting 27,556. Tax amount, we are expecting 4,148,000. And after tax monthly income, we are expecting 23,408. Then that is fixed. There is nothing you can do on it. On resign and cash, it is also fixed. There is nothing you can do about it. Once you say, I want to resign from GPF and cash my benefit 100% into the bank account, there is nothing. It's a decision. There is no option. Then we then look into 4,490,706. That is your lump sum before tax. The taxman says, okay, give me 1,318,702. That is tax amount. And after tax lump sum is what goes into your bank account is 3,172,004. But on resign and transfer, remember, once you resign, either you transfer or you cash. The moment you resign from GPF, you forfeit kept leave gratuity, you forfeit 15,000 medical, 15,000 funeral benefit, you forfeit medical aid subsidy. Then when you resign and transfer also, you are choosing to retire. So it is not different to retire with GPF, except resign and transfer is another alternative. So retire with GPF is A, resign, transfer, which is equally resign and retire, it's option B. And option B of resign and transfer now, it is flexible. It gives you option to choose how much income you need, which then will determine how much, how much lump sum you need on a once-off basis, which will determine how much monthly income you will receive. So here we did only the lump sum portion, so that it can guide you. Remember, the more you withdraw into the bank account as a lump sum from the fund value, the less is remaining to make sure that you receive a monthly pension. That's the principle. You've got 0% option to take lump sum. You can say, no, out of my 4,490,706, I don't want any lump sum. Use everything to buy me pension. You've got that option. Or you've got an option to say, what is my tax-free amount here? We work it out, and then the tax-free is 882,645. Then you say, kindly pay me my tax-free amount. Kindly pay me my tax-free amount, and the balance, use it to buy me monthly pension. And then once you choose 882,645, it means you won't pay tax on this. It's zero tax. Or you can increase the pot, the pipe, the water pipe, and you say, I want more money. Give me 33.33%, which is 1/3 of this amount. Then the 1/3 of the lump sum is 1,496,902, and the taxman is going to tax you 146,882 plus minus, and the balance of 1,350,020 rand is what is going to come into your bank account. Then 4,490,706 minus 1,496,902 is what will remain to buy you pension. Or you can say, give me the maximum that you can give out of this 4,490,706. And the maximum that you can get is 55.6%. Now, with 55.6% lump sum, that is 2,494,837 rand. Tax that you can expect to pay out of this is 211,708. Already you start to see that under resign and transfer, if you need more cash injection, you are able to get more money and you pay less tax vis-a-vis when you resign in cash, where you are likely to part away with 1,318,000 of tax. Then after tax, 2,283,129 is therefore remaining to be paid in your bank account. Resign and transfer requires a detailed analysis of your factors to arrive on the best possible lump sum that you need to get, and also on the best possible income that you need to earn. Then the question is, Edward, should I resign and cash my money, or should I not? The answer lies in the process. We can't answer you before we subject you through due process. What that means is that we want to subject you to a due process which will interrogate your benefit statement, interrogate your situation, family, personal, income need, balance sheet, liabilities, monthly income expectation, to arrive where we can make an informed decision to say what should you do, or what will actually be categorized as the best option for your needs. So how does this process get engaged? The process works as follows. One, you need to undergo workshops. We've done part 1, we've done part 2, we've done part 3, and now we are doing part 4. So once we have now interrogated this aspect, then you then enroll into step 2, which now the step 2 looks into you as a member enrolling into the retirement benefit counseling program. The retirement benefit counseling program then looks into What if you decide to retire with GPF? What if you decide to resign in cash? What if you decide to resign and transfer? And based on those decisions, we also look what are your personal circumstances, your family structure, family dynamics, your personal structure, personal dynamics, your balance sheet, and especially on the balance sheet, the liability side. And also we need to look into your expected monthly expenditures. Then once we've done that, then we are going to produce a comprehensive report which will guide us on each of the options and then leading into the face-to-face consultation meeting under step 3. And once we've done step 3, we believe now you are fit and proper to make a decision in terms of what you want to do. It is as simple as that. This whole process is called retirement benefit counseling process. Takes you through an independent retirement benefit engagement, looking into your personal circumstances without prejudgments to arrive at a point where you are able to make informed decisions. Then how do you enroll yourself into this program? The first thing that you do is to call the nationwide hotline number, which is the Retirement Benefit Counseling hotline number, which is operated by Center for Retirement and Advice. The number is 086 001 7402. I repeat, the number is 086 001 7402. And then once you've called this number, then formally you enroll yourself under the Retirement Benefit Counseling Program at no cost. Then once you are enrolled into this program, then a process will kickstart, wherein that process will interrogate and ensure that you, the Retirement Benefit Counseling Program receives the benefit statement from you. Once the benefit statement has been received, which comes from GPF, it becomes analyzed, and based on the need and the requirements and what the assessment outcome, then that report is then analyzed into a what-if analysis report, leading into a face-to-face consultation for Q&A session in case you've got questions, clarity-seeking questions, and the likes. And we believe from there, you will have the tools of decision-making. Then with the tools of decision-making, it means then you will decide after that process has been undertaken on the best exit option. And that is a far sweeter and nice option because you will have subjected yourself through due process. The decision will never be categorized as emotional in any way. And that decision will actually ensure that you sleep better at night, knowing that you have taken your decision-making through due process at no cost, ladies and gentlemen. There is no better offer than that. We travel across the country each week of the month, depending on a demand and supply. We find ourselves in Gauteng when there is demand. We find ourselves in Limpopo province when there is demand. We find ourselves in Western Cape when there is demand. We find ourselves in KwaZulu-Natal where there is demand. We find ourselves in Eastern Cape where there is demand. So far, I can say based on the outcome that the demand is coming out of Limpopo. The demand is also coming out of KwaZulu-Natal. So these are the provinces where we have received contacts. Members saying, I want to raise my hand. And by raising my hand, I'm saying kindly enroll me into the retirement benefit counseling because I want to take my decision, subject my decision through due process. Then such members are now enrolled into the program and we are busy workshopping them for a better decision making. So you are also welcome to raise your hand wherever you are in the country by simply dialing 086 001 7402. When you dial that number, it will take you straight to an advice contact center where indeed consultants are waiting to take down your details and make sure that they pass that information back to retirement benefit counselors to be able to make contact and guide you further on what you want. Ultimately, as a conclusion, the whole process has been designed to ensure that we assist you to make informed decision, one in relation to you undergoing education, two, making sure that that process of education end up in your benefit statement being analyzed. And then once the benefit statements have been analyzed, then the process further make sure that indeed you are able to make informed decisions. With that said, we want to believe that you are able to make an informed decision. With that said, we are certainly confident that you will be able to make informed decision. So the process, just to repeat, kindly hold on for me, ladies and gentlemen. Let me just go and just grab water, and then I'll come back in a minute. I'm back, ladies and gentlemen. Thank you very much for your patience. So, as we conclude the conversation, we want to emphasize that one, we educate, and then once we've educated, we then take you through a formalized retirement benefit counseling program, which will involve analysis of your benefit statement. And then once we have analyzed your benefit statements and your circumstances, then we believe that you will be having authority and power to make an informed decision. So we believe with that process, then you will be able to make an informed decision that will assist you into the future. What is up next is the Q&A session. This one is ideal for a member who has gone through part 1 of the workshop, part 2 of the workshop, part 3 of the workshop, and this particular part 4 of the workshop. Once you've gone through these 4 parts, then we hereby invite you to join us into a Q&A session live on the 27th April 2023 at 1800 hours. It will be Thursday. Is it a Freedom Day or Human Rights Day? One of the two. 27th of April 2023. We invite you 1800 hours. We believe by that time you'll be relaxed and you'll be having enough time to take things lightly. And then we hereby invite you to join us into that session live, where we are going to ask questions, and we are going to answer you honestly and fairly based on part 1 up to part 4 of the workshop. With that said, ladies and gentlemen, this concludes the part 4, which is Resign and Cash from GEPF workshop. We hope that you've gained the maximum value from part 1, part 2, part 3, and part 4. We strongly believe that with these 4 parts, you will be empowered to make sure that you are able to make an informed decisions. And we look forward to hosting you on the 27th at 1800 hours when you've built questions based on this part 1 to part 4, so that you can be clarified. However, do not hesitate if you want to enroll yourself into the retirement benefit counseling program. You are welcome to dial 086 001 7401. 086 001 7401. And with that, then that will be the basis through which you join the workshop and indeed benefit through the well-designed process. Thank you very much, ladies and gentlemen, and I hereby implore you to enjoy the recording. Thank you very much. My name is Edward Siweya. I'm the facilitator, and it was all my pleasure taking you through this workshop. Thank you very much, colleagues.